Alright traders, welcome back. In today's video, I'll be sharing with you how I managed to take this trade using the second model in the previous video, which is the ICT 2022 mentorship model. So let's jump into it. Today I'm going to show you how you can use the model with confidence without doubting whether you're on the right side or not. The secret is the higher time frame levels. First, you want to draw two levels on your weekly time frame before dropping down to the lower time frames. You want to highlight two PDRAs above and below that are closer to your current price, because that's where most of your high probability trades are going to form. So this is the weekly time frame. Right here we have our current weekly candle. So you want to identify the nearest weekly level above or below our current candle. So above the candle we have this level right here, which is our bearish order block. So I'm gonna highlight the wick and also the body of this bearish order block. So that's where price is coming from. Below our candle we have this candle right here, which is our bullish order block. So I'm gonna highlight the wick and also the body of the candle. So let's jump to the lower time frame. Just for confluence, let's zoom in. You can see that on the daily time frame, the body of the weekly order block is also a fair value gap on this time frame. So let's jump to the spices. So we are on the 15-minute time frame. The first thing that caught my eye is that the same weekly level aligns with the swing low, which is a clean liquidity. So now you want to anticipate a setup to form there, since it's aligned with an obvious liquidity plus a higher time frame level. So let's zoom in. So we have price trading to our first level. When this happens, you want to watch price from the time frame that's going to provide you with an entry pattern, which is your 5-minute candle down towards your 1-minute candle. So let's go to our 5-minute time frame. So we don't have a market structure shift yet, so we're going to watch price from this time frame. So now we have price trading into our second level, which is our liquidity. So now we have to wait for a market structure shift. So right now we have a market structure shift with a fair value gap. So you could take the trade on the 5 minutes. So let's look at the 4-minute. So now on the 4-minute, we have a smaller fair value gap, which gives you a better entry. But first, let's look at the trading plan. We already have a liquidity run or a trade to a weekly level. We have a market structure shift with displacement. So now you have to look for our fair value gap from the 5-minute time frame down towards the 1-minute time frame. When you find your first fair value gap, you are not supposed to continue further down with the time frames. So on this time frame, we have one right here. You want to set your limit order at the beginning of the fair value gap and your stop loss below the swing, and target the opposite side liquidity. In this example, coincidentally, the liquidity is also equal highs. But you can look at the 50-minute time frame and target the opposite side swings. The reason why I took my trade on the 4-minute time frame was because the 5-minute fair value gap was too big, but it doesn't mean that you shouldn't take it. The lower you go, the higher the chance of you not getting filled, because your entry is going to be lower, which are sniper shots on higher time frames. They look nice, but if you have FOMO, I suggest you take the first fair value gap you meet. Don't go lower if you find one. Anyways, it's the rule of the model. So let's jump to the actual live trade. In this trading session, you can see me hovering between two platforms. The reason being is that the MT4 does not have the time frames between the 1-minute and the 5-minute, which is the 2-minute, 3-minute, and the 4-minute time frame. So I'm using MT5 to locate those time frames in between. So now in this session, I was using the 4-minute time frame on the MT5. So right here you can see me locating the actual price so that I can copy it to my MT4. So I just took the price levels so that I can use it to execute. So now you can see me marking the price on my MT4. So that's the actual level I'll be watching. So currently I was waiting for price to come to that level so that I can execute. So with that I was also measuring the actual pips, because you have to know them by head. You have to be very fast so that you can manage your risk. So now when price traded down to that level, I switched back to my MT5 to check if it's actually in the fair value gap. So now because I didn't use a limit order, I had to execute and then had to set my targets and my stop losses like always. So first I put my target at the closest high I could see, and then I hovered to the 50-minute time frame. I saw a fair value gap, and then that's where now I was like, I'm gonna put my target. That's where my target was, on the upper fair value gap. And then the rest, all you can do is wait. I'm just gonna fast forward because it's gonna make the video very long. So now you can see that we have traded past the first swing. So you might get a reversal, a retracement. Usually that's where you're supposed to take partials. So what I did, I put my stop on break even because you were too close to the take profit. But usually when I'm too close to the take profit, I don't like to wait for TP to be hit. I usually close my trade because sometimes it can reverse. It has happened a lot. It can reverse and do other things that you didn't expect. So why not take your profit? Because it's very close. So I jump to the 1 minute, and you can see right there I put my stop on break even. So yeah, so yes, that was the trade. So guys, if you like the content and if you want to see more of my live trades, if I should record all of my live trades, please leave a comment down below, and please like and share the video for the YouTube algorithm. And I thank you guys for the support and for those who actually watch the videos. So until I see you next time, that's Vatanya.